Hey, this is Justin with DayTradeTheMarkets.com and DailyMarketAssistant.com. It is Friday, the 24th of January, 2014, and the index markets today just got slammed. They were down over 2% today, so really big sell-off. So I wanted to look more in depth at the sell-off today and what it means going forward, and look at some of the ways that you can determine, is a trend day occurring? Is this really happening? Is this wise to get in on this move? And where should you likely want to hold it? What would your targets be? Where would you looking to be holding the trade or getting out of a trade? So what I did is I've still got, I took off the filter and I took off the support, the short-term support resistance and the decelerations and the high velocity moves, and I just left the aggression bars. So they're telling us in real time whether buyers or sellers are more aggressive and to what degree. So I've still got those on from the Day Trade the Markets, and I wanted to also kind of show that in conjunction with these levels that you can get on the DailyMarketAssistant.com, which is a relatively new site that we've got, which you can find at DailyMarketAssistant.com. Take a free trial. It's looking at some ETF and stock, or excuse me, some ETF and futures levels for most of the major markets, talking about the bias, giving you a bit of a roadmap, some of the key levels to look at. So, for example, if we look at this is from today or heading into today, if we look at the ES, our yesterday our day trading directional bias. So if you're more of a day trader, the side that you'd be looking to get on, unless the market proved you otherwise, is down. And the swing trading bias, the little bit longer term bias, which makes sense because this market's been going kind of straight up for the last few months, is still up. But this is a really key level here at 1805.50 that we would want to monitor to see if the buyers were really there. And then we also have these levels that we want to monitor down here. And so what I've done is I've just notated that on my chart. This level I put in the red is if we got below the excuse me, the 1805.50 area, this would really be a kind of a really key line in the sand as to whether sellers were completely in control of this market on both a more of a swing trading sense and also a day trading sense. And these other lines are just the key levels to monitor. So you want to just kind of monitor what the market does at each of these levels as the market tests it. So we got below, we wanted to see what if buyers would step in around 1812 or 13 in the overnight. And with news this morning, the market was below the 18, it opened below that 1213 area right here. Okay, so that's our first thing. Then we want to see what can happen at this 0950 area right off the bat, and you can see that we pierced right through that level on a level level 3 selling aggression bar, extreme selling aggression. But the real thing we wanted to monitor is right down in here at this 0550, and you can see we had a pretty nice bounce right off of that from right off the get-go. Had some pretty strong buying that came in. We tried to get back above this 09 level, tested it again, bounce back up. So this is really a key battleground, as we were thinking it would be. This is a really big line in the sand, if you will. And so we wanted to really monitor what could happen here. And then you can see the third time that we tested, which is often the case when you kind of knock on the wall a few times, knocked on that wall a third time. And this time we got through and did so on some pretty major selling aggression right here. This level 3 extreme selling aggression actually closed below this level. It's showing us this is a pretty legitimate attempt to get below this 1805.50. You can see we had a little bit of pushback, then we cut up there and sold off again. And so once we get through that level, if you think about these as kind of rungs on a ladder, we want to see what the market does at each of these levels. And if it can get through one on pretty strong selling in this case, most likely we're going to go test down to the next one down here around 1801. You can see we got a bit of a buying reaction off of 1801, but we couldn't get back up to 1805.50. Then we took that back out with really strong selling aggression. So when that happens again, our thinking is we're going to go test down to around 95. We do that, so this is a good place if you're kind of just in and out of the market, as more of a day trader. These would be some pretty good targets right in here. So we're down to 95, and we do get some buying that comes back in. So okay, let's go see what happens at this next stair step level, around 1801 again. Well, you can see some really strong selling comes in. We test right back to the high and go back and test our level. Extreme selling comes in again. Okay, we're probably going to go down to 1790. We get a bit of a bounce right back up to that next stair step level. Then again, we pierce right through it on some strong selling. Come back and retest it. come back down and within a point or so and get some buying, come back right up to that level, and we pierce through it and head right down to our 80 level. So this was a huge sell-off in one day, but by utilizing these stair steps or ladder rungs or whatever you want to call it, as well as this really key line in the sand right here, it's giving you this, once we broke through, it's telling us, okay, these, you could see that the bulls really tried to step in a couple of times right there. Bears essentially, quote, won the day, and then we're going to go test that next level, then we're going to test that next level, then we're going to test that next level, okay? And that's a good way of giving your, now is this going to work perfectly every single day? Is it going to be to the tick every single day? Of course not, but what you're looking for, if you have this method of thinking, or if you understand the power of this method of thinking, is you're looking for a roadmap, you're looking for a guide, and that's what this is providing you. So hopefully that makes sense, and it's just a helpful way to, to say, okay, this is what I would expect to happen, and is this happening? Okay, then I'm still on pace, that things are still looking good. Once you get something that's not expected, that gives you other information that you can adjust to. So hopefully that makes sense in terms of how you can use that. So that's the ES, the E-mini S&P. Let's look at the Russell as well. I know I tend to focus on the ES a lot, but a lot of people like to trade a little more exciting markets most days, and Russell is one of those. So in our Russell, we had a similar situation, but we headed into the day. The Russell's been stronger than the ES in general, so our bias has been more up, but obviously things can change during a day, so that's why we always put a change scenario, if you will. So if this market could stay below 1170 and then 1162, it's going to change our biases to down. Okay, so those are the two really important lines that we want to monitor, and so you can see that early in the day, well, obviously in the overnight we got below that 1170.3, and then as we open, we're testing into this 62.4 area. So this is a key level, and you can see, we gap down. So whenever you get a gap, you want to ask yourself, okay, is this thing likely to fill, or is this thing likely to continue? And when you get that level 3 extreme selling and they get continuation, it's a pretty good sign that this thing's going to continue on. And then our next level down that we want to monitor, again, the ladder rungs or stair steps, if you will, is in here. And you can see we try to get a little bit of pushback on the bull side. Some people come in to a degree, but we can't get much lift at all. And that's a clue in itself. We kind of putter around there for 20-30 minutes, and then we have another sell-off below this level, okay? And then we get some pretty strong, some extreme selling as well. What's that telling us? It's telling us we're likely going down to this 1143 area. That's our next little stair step. And you can see we get a little bit of a reaction and stay there for 30-45 minutes in this zone. And then, we break down lower again. Again, we're likely headed down to our next level around 38.50 right in here, get a little bit of pushback, test up again to 1143, close back on the lows. So again, both of these markets, we got through this really important, these important swing trading bias lines in the sand, if you will. And so going forward, this looks to be a pretty darn important development in the market in terms of the bears really taking over. So until that changes, until bulls can reassert themselves, this is certainly a market that's safer to be trading from the short side, both from a longer term and from a day trading perspective. So hopefully that's helpful. If you haven't yet taken the trial of the Daily Market Assistant, I really do recommend it. People have been pretty the feedback's been very good. And again, I really do feel like it's a good roadmap for you. It's not the holy grail, it's not a miracle, but it's a good guide to help you stay on the right side of the market more often, and to give you some guides in terms of targets and where you look for buyers to come and look for sellers to come in. Just gives you that another piece of evidence that you can use to make better decisions, whether you're trading with our aggression software or you're trading with your own method, whatever the case may be. So let us know any questions you have on that, and we will talk with you soon. Thanks.